is October 29th, 2025, and the Bank of Canada has just cut the overnight rate another 25 basis points, Jamie. And this has to be the one that shifts market sentiment, right?
Oh, this is the one, Denny. This is the one. I mean, everyone's been waiting for this moment.
It seems like every rate cut, people think, especially on the sell side, people think, oh, one more rate cut and then all the buyers will come back and write offers and they'll go over asking again. And it just does not seem like that is going to be the case for the remainder of 2025. But a quick update on rates. So another 25 basis point cut this morning. That puts us at now 2.75% of interest rate cuts since June 2024. That's a little over a year. So what's that? 16 months, and 2.75% cuts. So the overnight rate now is 2.25%, which will bring your bank's prime rate down to 4.45 in most cases, which is what your variable rate mortgage works off. And so once that prime rate changes in the next few days, your variable rate, depending on your discount, will be somewhere in the 3.5 to 3.8 range.
Yeah. Which, I mean, depending on if you have prime -9 versus prime -6, depending on when you got it. But yeah, that's mid threes, mid high threes.
Back to mid threes.
That's cheap money, Denny, compared to the last couple of years. It's nice to see people's, amortizations go down a few more years too with these cuts.
I called one of my lenders the other day and asked if I could bring my payment down with all these rate cuts. And he looked into it and he's like, you're still above the 30-year amortization. So he's like, call me back in a year.
Yeah. Wait, we need a few more cuts before it gets there. I think this cut might get me back to the original amortization I signed up for. But no, all in all, it is good news. It is kind of timely news I think the real estate market's not going to react to a rate cut in an October, November, December market, but this may show its colors next spring. And we may see more rate cuts before it gets there. So sellers don't anticipate immediate change next week after this rate cut. And buyers, market's not going to take off next week, but I don't think buyers are thinking that anyway.
Yeah.
All in all, a good sign though for variable rate mortgage holders, and hopefully more transactions and more predictability in the market next spring. I think a lot of the reason for our sales numbers being down is just uncertainty and fear. And when people have a little more certainty in a sale price and buyers showing up, it doesn't even have to be a high sale price, just more certainty that it's going to sell, then more people will move. And I think a lot of people are on the fence right now.
One of the most common things I've heard in negotiations recently when we're on the listing side is buyers agents and buyers saying market values are coming down, like anticipating that they're going to be lower in a few months from now than they are today. And if that was really the case, why would you buy today? Why not wait? But right? But it's in almost every negotiation, that's what buyers agents are saying to us. Would you rephrase that to market values have come down, or do you think they are continually coming down? And so I know we did a big market update last rate cut in September with stats on specific areas, just kind of talking about different product types. And I'll share some overall Greater Vancouver stats of, what our sales volume was in September comparatively to August and then comparatively to last September. But how do you answer that question? And do you think that is going to be the case for the next couple months for the end of 2025? Or have we kind of I mean, when you look at sales volume and sales numbers from the spring to today, our average sale price is down. I would say in the range of 5%, maybe 5 to 7, depending on product type and location. So they've come down, but are they coming down?
Are they continuing to go down? Yeah, this is more of a trend. I've been calling the bottom a few times here, so I'm the last person to ask on this one. So, I think last fall I thought that was going to be the bottom, and right now I'm going to call it again. I think we're in it. I couldn't imagine things getting worse. I thought it was bad last fall, and it's probably 10% worse in a lot of cases. If you kind of look at where the factors on what got us here, it was, we're coming off high rates. We're coming off a lot of uncertainty. The whole Trump talk with tariffs was the start of the year, and just all that uncertainty and higher rates have checked the market. If rate cuts continue to happen, not that they're going to go to zero right away, but we haven't seen rates like this. Since, July and August 2022, in terms of the bank rate. So the overnight rate. But yeah, I think we're in it, Denny. I think it's more likely to go up than down. I think when I look at next spring, I would anticipate our 5-year fixed rates are going to be lower than they are today. If prices went down another 5 or 10% with mortgage rates improving, I would be shocked. Now, that said, between, call it November, December, January, February, off-season, unpredictability, there aren't many buyers out there. And if a seller needs to sell quickly, there are cases where they have to discount significantly because there's just no buyers looking for their product that month, that moment.
Yeah.
And I think that we've seen that this year is the kind of anomaly sales where you see, well, that was a smoking deal. That seller had to go. So the reality is there's not enough buyers to consume everything on the market right now. Not that there ever is, but this is the first time I've seen good products have to significantly discount to get attention sometimes. And so, yeah, this winter will probably still have uncertainty. You could argue, make a stretch call that there could be some continued downward trend, but my thought is it's more likely to go up than down if we're comparing today's prices with, call it, next March or April. I think next March or April is more likely to be a little bit up or a little bit more competitive for buyers, a little bit more action for sellers than what we're seeing today. But I've been wrong in the past.
Do you want to hear some stats?
Yeah, fire away.
So this is overall Greater Vancouver. So a little bit more macro in terms of our Greater Vancouver market. Single family homes up 7% comparatively to sales in 2024. So there's 555 sales in September 2025. That is down. Interestingly enough, almost all product types were down in sales volume comparatively to August.
September?
Comparatively to August. August had more sales volume than September.
That's an anomaly.
Every product type. So single family was down 3.5% comparatively to sales in August 2025. Condos were, just very marginally down 0.3% compared to August 2025. And townhouse sales in Greater Vancouver were down 11.3% comparatively to August 2025.
Yeah, that's unusual. In our business, it felt the opposite. So that just kind of shows how our little business can go against the market. But our business, it felt like September was more active than August, but by the numbers, that's clearly wrong.
Totally. When you look compared to 2024, again, most were down. Single family was up 7%, but condos were down 1% comparatively to September 2024, and townhomes were down 12% compared to 2024 sales.
Really? Yeah. Huh?
Days on market up, as you would imagine, in most, in all product types. And then the median sale prices, which is interesting. Median sale prices down for single family, 2%, very marginally compared to last year. Median sale price for condos down 1.5%. And median sale price for townhomes was like pretty much the same compared to 2024. So
we are living in this world of sales being below the 10-year average. Even when there was an optimistic news headline from the real estate board, it was just 1 month was 1 or 3% above that same month last year.
Yeah.
I think that's going to be the biggest change that we're going to start seeing next year, but that's a bit of a next year guess. I think in the next few months, we're going to continue to see low data and probably a lower median sale price, because I think the sales that are actually taking place, or call it for single family homes anyway, lower price points are far more active than higher price points.
100%. That's kind of across the board too. Is like the 2-bedroom condos, those luxury 2-bedroom condos in New Esther, Burnaby that are $1 million or more are like their sales ratios are very, very low comparatively to that like entry-level 2-bedroom condo that's 825 square feet listed at $599 or $699 depending on neighborhood.
Well, the buyers for those often have to sell. And so the buyers are making that decision. Do I want to take the hit on my condo to upsize to a bigger condo, or do I want to take the hit on my house to downsize to this large condo? And I don't think most want to. I think most are hesitant to. Although I would say this is a great upsizing opportunity if you can afford to do it. Downsizing, yeah, I get that argument. If you're in a single family home and you're waiting for brighter days and you're willing to live there for another year, probably going to work out. But if you're looking to move to something that's pretty rare, now are your best buying conditions. So you might find a place that you love to live in for the next decade that won't be available when times are more competitive.
More so in the last few months than any point in my career. I've heard people coming through open houses, when you're asking for feedback, they're saying, oh, well, I got to sell. And at some point, it'll be a bit of a domino effect when those like smaller condos become a little more active. Maybe that's in March or April this coming year. That next level is going to be quite competitive when all these people have sold now, because it just seems like that's the majority of the market that's coming through stuff right now is, I got to sell my condo. My condo's up for sale. I haven't got an offer. It's been on market 2 months. But
yeah, it almost seems normal that the buyers are showing up before they've sold and ready to buy.
Yeah.
It's, even when you get a private showing, half the time they have to sell first. And the agent's using that showing as an opportunity to try to motivate them. Yeah.
Speaking of showings, like it doesn't seem like that's slowed down. And it almost seems in the last 30 days, so majority of October, that it actually is picked up from September and, our little bubble of our current listings.
Well, that's because you have the most active listing in Lower Mainland in Brentwood.
Oh my gosh.
I can speak to a few other listings that are crickets.
It's a nice 2-bedroom condo with a good view in Brentwood, block from the mall. And I had 8 private showings last week after being on market. I mean, we've had 3 offers. It's been a bit unlucky, but it's been on market a month and had 8 private showings.
We get each other's touch base requests, which are these, messages that come in our email when someone requests a showing or information. And we get them for all our listings. And this one listing in Brentwood is like outdoing all these, like it's getting more inquiries than every other listing we have combined. So Brentwood, there's a lot of buyers looking. I think that's a sign, well, at least in that price point, which is well below replacement value and what new construction's selling for.
It's, if you're a real estate nerd like us, it's interesting to just see how these environments change through different markets. And it is very common right now, that Brentwood condo specifically, it is very common right now for buyer's agents to set up showings. And every time they come through, I will ask them, how many are you seeing today? And that number has steadily gone up in the last few months. And there was one on Saturday, a couple days ago, that was seeing 9 different condos that day.
You don't even remember what's what. Any other stats or stories? I got a few, but...
Yeah, go for it. I didn't want to overwhelm people with too much info today, more just like Greater Vancouver and what the last couple months has looked like. And the most interesting thing for me was sales volume in most products down from August.
Yeah, which is odd.
I don't even know. I mean, I didn't look back, but if you look back at the last decade, do you think this is probably the only time that that's been the case?
I bet you 9 times out of 10, September is more active than August, but markets can be finicky. And again, we might be a little bit wrong. Like we noticed that in our residential bubble, but there might be other areas that move against the grain where August is a little more active in the summertime. I don't have as much data in terms of, overall stats, but I did kind of just take a peek at one thing, like new West condos, for example. We have a lot of new West condos listed. Well, not a lot, but we have a few, and we're getting a good gauge of what 2 bedrooms are doing there and where the values are at. And I just kind of isolated 10-year-old 2-bedroom condos because I noticed a lot of them been trading the last 60 days, 30 days. And they're selling for just the median price, the typical price is about $700 a square foot. So you can buy a 10-year-old condo for $700 a square foot in New Westminster.
Yeah.
They can't build them for anywhere close to that. So new construction starting at probably $1,000 a foot plus. People that bought new construction that are taking a hit are trying to sell them for $900 a foot. But a lot of 10-year-old products are selling for $700 a foot. So I see that as being good value. I think that's probably a number that's you might find in Coquitlam as well, maybe a little higher in Burnaby and Port Moody. But I don't see that going down to $600 a foot, for a 10-year-old condo. I was trying to see if there is an uptick in forced sales, court-ordered sales, foreclosures. One thing I noticed, and if there's any realtor listening out there that has a hack to how to search this, I'd love to know. There used to be an option in Paragon, or the site that we used to look up seller's interest, where it might say court-ordered sale, and that option's no longer there. So, I'm kind of looking at, for keyword searches like as is, foreclosure, court-ordered sale, and I didn't see a lot. So I didn't see like even in Burnaby, there was only just a couple. Like it wasn't a major uptick in for sales that I could notice. I'm sure there's more than before because people aren't gaining equity in these homes the last few years. Like in 2023 or two, you'd probably seen virtually no court-ordered sales. Well, not from like a person going under because they'd have equity in their home in most cases. So haven't seen an uptick in court-ordered sales. Going to be watching for that because I think there's a very good argument that says that there should be more. And maybe it's a next year thing. And if there's a way to search them specifically, reach out. I'd love to hear about it. But in looking at these court-ordered sales, I did land on one pretty cool sale. So there's a high sale that happened in Delta. And it was for $9.58 million. Like a 57-acre plot, a house, 10,500 square foot house on 57 acres that sold for 9.58. Denny, guess what that same house sold for 15 years ago?
15 years ago, 2010. And you said the sale price was 9.5.
958 today.
I'm going to say 15 years ago that sold for 2.7.
Sold for 8.9.
Oh, wow. Okay.
It only went up $600K, like $680,000. No, it only went up.
I thought maybe you were going to say there's some higher density potential now.
Usually you'd see that. I mean, this is particularly ALR. Like this is like, someone's palace on 57 acres with horses. So this is like ballin' pad. But just kind of going into it, like that's not a lot of lift. They paid $8.9 million in 2010 and it sold for $9.58 million today. That kind of shows what a distressed sale would do for a luxury, unique, tough to sell product. In Denny, in normal case, if I gave you another example, there might be an example where something goes triple in value, right? In a lot of cases. In this case, it did not. And after digging into it, I think the owner of this was a developer. I think it was someone I think this is a sign of someone that is getting caught in this market. Another thing that I discovered in looking for court-ordered sales and foreclosures, and this is not one, but Burnaby had a high sale recently, and it was, and I thought it was just kind of like a big. I was just like, I didn't expect a $5.2 million sale in this market to come out of Burnaby, but just a little surprise that Government Road sold a house for $5.2 million recently in this market, and that was a standout high sale that I've seen anywhere in the markets we sell in. Outside of that, I kind of decided to be a little bit of a financial expert and try to predict where fixed mortgage rates are going, and all I'd say is, I'm looking at our BOC rate announcement going down 25 points last night. And I'm thinking, well, okay, variable rate holders are winning. What's going to happen with fixed rate holders? And I kind of did a little browse at my spam that I get from like Dominion Lending and their rate emails. And I kind of went back at looking at, okay, in that spam that I get 5-year, which I welcome, I like these rate announcements, but the 5-year fixed rate in the last email I got from a Dominion Lending rate email was 4.19%. So for a 5-year fixed at 4.19%.
Yeah.
Now our 5-year bond yield in Canada is 2.6%, give or take right now. If I go back, call it to July, so the fixed rates offered by, a mortgage spam email went from 4.39% in July to 4.19% today. In January, it was 4.54% for a 5-year fixed. And in this time last year, it was 4.39% for a 5-year fixed. So there hasn't been a lot of movement in the 5-year fixed in the last 12, 13 months. It's gone up a little bit and come down, but it was, an email that I received a month ago was 4.39, and an email I received 13 months ago was 4.39. Difference being is the bond yields come down quite a bit in that time. So, July's bond yield was 3.1%, down to 2.6 today. That's 0.5%.
Wow.
And it peaked last November in call it a year ago-ish, at nearly 3.3%. So I guess the main thing that kind of highlights, ignore last November for a moment, but July to today, down 0.5%. Fixed rates have gone down 0.2%. Usually, that tells me that there's either more room for fixed mortgage rates to come down, or there's just a much higher risk premium for banks that will stay. And my guess is that I think that risk premium will come down a little. And I think we'll start seeing 5-year fixed mortgage rates come down a little because they're not going down as much as the bond yield is right now, unless that bond yield shoots up.
Yeah.
That's my 2 cents, Denny, on where we're going. And that's part of the reason why I think we're going to have higher prices next spring. Not for everything, but call it like that 700 square foot 2-bedroom condo in West that's priced well, or that entry-level single-family home. I think it's more likely to sell for 5% higher next spring than 5% lower. Yeah. And by spring, let's just call it April.
Yeah.
Yeah.
Another story worth mentioning, just like, I know it's a lot of everything's down, sales are slower, days on market are higher. There's been a couple East Van half duplexes that I've had clients write on or be interested in the last month or so, both in September and October. And there's been a couple that have got multiple offers. One of them sold over asking. So there is still some product types that, in price correctly, they just don't have a great supply of them. Like this was a really well constructed, much nicer than a lot of them that we've seen in terms of construction quality, that was listed at 1.1. That was a 2-bed, 2-bath, half duplex that was maybe 1,100 square feet. So right around $1,000 a foot. That was built in 2019, I believe. So 5 or 6 years old. And that got 3 offers and sold over asking.
Yeah. I mean, East Van's probably one of the strongest markets out there right now, if not the.
Yeah.
I couldn't name a stronger market other than just call it a 1.3 million turnkey single family home on a quiet street, if you could ever find one in the suburbs,
Turnkey at 1.3.
Yeah, maybe 1.4, 1.5 might be more realistic, but I mean, we know that single family homes get a lot of attention under 1.5, or just in general. But East Van, you bring a single family home up there for 1.5, you're going to get everyone calling you, but that's going to be a dumpy house.
Yeah. Do you want to mention Burnaby changes?
Yeah, let's do
or
it.
should that be a separate?
Yeah, let's go. I mean, it's not, well, one, I think it's worth mentioning because it's not really going to change much, you know?
Yeah.
It's not going to really change the market. Everyone's talking about land. Like, I even still get sellers calling me saying, hey, would you like to provide an evaluation? My neighbors want to sell, might be a land assembly opportunity. And I don't even see it happening. Like, I couldn't even tell you when land assemblies are going to start being more desired, like get back to where they were before.
Yeah.
I mean, I have a client even that saw a townhouse in Port Moody that the whole complex is listed as an assembly for $30 million. And, in that case, what do you do with an old townhouse? Do you add value to it? A dumpy old townhouse in Port Moody? Do you renovate it when it's listed for $30 million? Do you renovate it to, add value to it? Or are you just sinking money into something that's going to sell as a land assembly? My thought is over a 5-year horizon, you might be adding value to it. Over a 10-year horizon, you might be, land might come back in 10 years and more likely to go to a developer, I'd say, over a longer horizon.
Yeah, I'd say you're pretty cautious about where you're spending there.
But Burnaby is kind of been an interesting story because they took that NDP density, small scale, multi-unit zoning mandate as truth. They took it to the word. They were the most, they have their act together and they move fast and they kind of implemented exactly what David Eby wanted them to implement right away.
Yeah.
And it kind of backfired on them. So they kind of listened and I guess lessons learned. Drag your feet a little, or maybe go 80% there. Don't go 100% there because I think the 80-20 rule would have been a nice touch on this one. But to kind of highlight what they did, Denny, is they got a little bit of an uproar over, well, one, the density for these single-family lots they went more than double in compared to what you can build on some of these lots today versus what you could do 2 years ago. And now we're starting to see some of these structures pop up. And once they pop up, regular people living on the street start paying attention. Before they pop up, it's a very small section of people paying attention. Yeah. And once you build one of them on a street and everyone sees, oh my God, is that 4 stories? Or that thing is huge. It starts creating some conversations. So I think what you're going to get into is there's been some news articles and some releases about Burnaby backtracking on their density, on their zoning. And Burnaby implemented this small scale multi-unit zoning, which was it 4 to 6 units or 3 to 6, however you want to classify it, on a single family lot. And they did exactly what they were told to do by the province. And it was a little harsh. And that basically you build taller homes. So it was like 4 stories in the front, principal dwelling, and you could do a 3-story laneway in the back, which is a lot. People like looking at skies in the city, and when you start having all these structures tower over you, it doesn't feel as good. So I think what Burnaby did is their density is not based on floor space ratio or buildable area for the lot size. It's based on height, and they reduced their infill back structures from 3 stories to 2, and their front structures from 4 stories to 3. They reduced some site coverage requirements, so you can't cover as much of the site, and they upped the parking a little because they saw that parking was going to be a problem. Now, this was all obvious. Now that, hindsight 2020, you can see that they went too hard on it. Denny, how do you feel about this change? Is this more reasonable to you? Do you think that this is the right way to zone now? How did you feel about it before?
I think Burnaby had a bit of excitement when this stuff was all announced in 2023 because they went harder and more aggressive than Vancouver did, which was even before all these.
I think we should replace excitement with less dysfunction. Because I don't think they're excited about the zoning change. I think they just do.
I wasn't meaning the city. I was meaning like developers were excited.
Oh, totally. Yeah,
right.
Totally.
There was a little bit more optimism in a market that has been really slow for 3 years. We saw this little perk of excitement from developers, optimism that like, oh, okay, well, we can't build a 12-story complex. We can't build a tower because these construction numbers don't make sense and interest rates are too high. But there is a little bit of a margin on these 4 and 6 plexes if we can actually get this square footage that Burnaby is providing. So, for example, we've talked about this in other podcasts, but you could potentially get up to like 9,000 square feet of buildable area on a 6,000 square foot lot, which is chaos. And how do you fit that all in? Good luck. But we've seen a couple of them pop up now. So dialing it back a little bit reduces
and I guess 9,000 square feet on a 6,000 square foot lot, where before you'd get 3,985 square feet or something, 3,980.
That was a specific zoning. Was that R5?
That was R5, yeah. So went from 3,980, call it, to 9,000. Crazy.
Yeah. So what they've dialed back that Jamie just mentioned is going to reduce what you can build by about 30 to 45%. So going
from this 9,000 figure.
From the 9,000 figure. Yeah. So the height, the one thing you didn't mention was the height. So yes, you can build less stories now, 4 to 3 and then 3 to 2 on the laneways. But they reduced the height from 12 meters to 10 meters. They reduced the lot coverage by 5%. And in total, all of those changes are going to reduce what you can build by 30 to 45%. So that 9,000 figure might come down to, what's 30%? 5,500, 6,000 maybe, in that kind of range.
One FSR.
I think
another simple way of just doing it.
well, that's what Vancouver did, right?
Yeah.
I think it's another change that is counterproductive in terms of what the province is asking for in terms of we need more density. Because when you dial all that back, now I think developers are going to look at these sites and be really specific about like what they spend on the land in order to make a project like that even make sense anymore. Whereas when you could get somewhere in the neighborhood of 8,000 to 9,000 square feet, there was a pretty decent margin there that I think a lot of developers were starting to go after. And what was the last time we talked about? There was something like 300 applications for these units.
It was mid 2s or higher. Anyway.
Yeah. Mm-hmm. And I just see that number of applications diminishing over the next couple of years. So if the goal is to provide more housing, I think if you're living in this neighborhood, it's a really good change because you don't want a 4-story unit next to your, 9-foot high 1950s bungalow. It'd be kind of chaotic looking up at these like monstrosities. But from a development perspective, I think it means there's going to be less of these constructed in the next 5 years.
I think 9,000 square feet. Yeah, you're right. It makes it slightly less appealing from a developer from what they had. The ones that could do 9,000 square feet versus say 6. But ignoring giving them 3x the buildability, then taking back some, ignoring the way they got there. If we just went and said single family lots can get 1 FSR or 1.1 FSR. This means 100% floor space ratio or 110% floor space ratio, which means if you have 6,000 square foot lot, you build 6,000 square feet of house. Ideally, you stick the main floor footprint equivalent into the ground so that if you have 3,000 or 2,000 square feet of main floor structure, you should have the same underground because you're not adding massing and there's a lot of livability there. So I guess where am I going with this? I've lost my train of thought here, Denny.
It's just like feasibility and will developers do this now?
I remember where I was going. So ignoring height restrictions and just going back 2 years, 3 years. New Westminster had a great example. They came, or maybe this is more years. They came up with their official community plan, which they spent so much time with public consultations and feedback for, and they created these higher density areas like along 8th Ave and Saperton, where you could do townhouse zoning from single family. And the FSR that they were kind of targeting was around 0.9, 1 in some cases, but it wasn't enough to really stimulate many land assemblies and developments. But let's just call it 1 FSR. New West went from single family in Saperton and busy streets to have more infill row homes. 1 FSR. The problem is that it involved uncertainty, a long process, a rezoning period, public hearings, all that stuff. So very few went through. If it was streamlined without public hearings, without that extra process, I actually think 1 FSR 1.1 is the right number if you want more density in a busy street, in an area like Saperton, in an area like North Burnaby, in an area that's close connected to transit, that's surrounded by urban amenities. 1 FSR. And that's 6,000 square foot lot, 6,000 square foot of buildable space. It actually makes good family living dwellings, and you can have 3 or 4 good family homes on that. If you are a city like Port Moody or Coquitlam that backs onto a greenbelt, I don't think you should have zoning that accommodates 3, 4, 5, 6 units up in Heritage, Westwood Plateau, Heritage Mountain. I think cities that back onto the forest and greenbelt, make them ignore the Westwood Plateau areas. They're not teardowns anyway, but maybe 50% of those cities should be upzoned. And maybe 80% of urban cities like New West and Burnaby should be upzoned. There's always 20% that is just difficult or it doesn't make sense. Like, do you want to see townhouses in Government Road? Maybe, maybe not. What about Lower Buckingham? It'd be out of place, but it doesn't mean that can't. It just, I think there's areas that the infrastructure costs to get townhomes there aren't worth the gain. And if you give cities the permission to just exclude 50% of their single family zoning, if it's like Heritage Mountain or Westwood Plateau or Queen's Parks of New West or Government Roads or Deer Lakes of Burnaby, where the density is really low right now, and it might just be more infrastructure work to get the reward. I think they got to backtrack a little. I think what Burnaby's doing shows that they're listening and shows that they're reasonable. And the other cities around it can use this as an opportunity to learn from Burnaby and just take the wins out of their zoning and apply it to theirs. I'm still very curious to see how Coquitlam, Port Coquitlam, New Westminster, if they make further changes to their zoning in the next year. What do you think? We're talking about Burnaby. We're not talking about Vancouver's similar to Burnaby in terms of density, but there's a lot of other cities that we're not talking about. When's Coquitlam going to do something?
Well, on that note, has there been any repercussions from the NDP provincially? Because remember when they brought this out, I think it was June, it was somewhere in 2023. They're like, and you have to have this done by this time next year. And then that date passed and nothing happened.
It's interesting
Burnaby,
times.
right?
Yeah, nothing really happened. And then also once these things start popping up, is the neighbor of that 4-story going to vote NDP again? And especially this might be a scenario where Burnaby might have 50 to 100 of these 4-stories floating around in single family neighborhoods that are under construction or built right now. That will be a one-off blip. That won't come back. That house was a 2025. Interesting times for Burnaby, but I like that they backtracked a little. Not just because it's more sensible, but I think it is more sensible, and it shows they're listening, and it also shows that they're holding their own on a higher density zone too. Their backtrack is still more density than neighboring cities.
Yeah. We mentioned it before and you touched on it there, but the blanket across the province was always a bit confusing and bizarre to us versus like highlighting neighborhoods that are closer to transit and maybe giving them this extra density, but backtracking on others.
Yeah. It would be really interesting to see if New West or Coquitlam would give away equivalent to a 1 FSR or like 6,000 square feet of buildable space on a 6,000 square foot lot without a public hearing, without a rezoning, without like just a streamlined process. I don't see that. I mean, I would be shocked if that happens, but that's what Burnaby's doing. And so we'll see if others follow.
Beauty. That is it for October 29th Market Update.
That's our market update, folks. Thanks for listening.